Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we bring to your attention analysis of the Great British Pound, and we call you to pay attention to it because right now it's a very important moment for the Great British Pound. Also guys, euro currency we have discussed 2 days ago, so the breakout up has been cancelled and probably it will be postponed for some time. So right now market is bouncing down from the important area. It's difficult to forecast right now how deep this retracement will be. But anyway, we haven't got the breakout, and probably currently it doesn't make sense to talk about it. So on the Japanese yen, we have discussed everything yesterday. So market stands in upward bounce. We have estimated the target yesterday. Also we have specified the patterns that could be formed on the Japanese yen, particularly speaking. This they are brand by the sell could appear very soon, maybe today even or tomorrow on the Japanese yen. And also we have the double repo buy on the time frame chart. On the Great British Pound, situation stands on the high time frame, I mean the daily. And when we have when you will hear today the discussion of this situation, you understand what the importance right now stands with the Great British Pound. Currently guys, I don't know, do you remember our recent discussion, but in 2 words I will remind you our previous conclusions that we have made on the Great British Pound. So first of all, we have long-term bearish view on the Great British Pound. And we think that the Great British Pound should drop lower in the long-term perspective within the 1-2 years. We probably will get the number somewhere below 1.3 area or even lower. In the shorter-term perspective, in the shorter-term analysis, we said that market stands in some upward bounce and we wait when this bounce will happen. But here market is forming some kind of the hand shoulders pattern. At the same time, when we have taken a look at last time on the Great British Pound, this was at the 23rd of the March, this area, we said that we see some not natural behavior with these head and shoulders. Particularly speaking, it stands in relation to this ABCD action. When it has been formed, the CD leg of this ABCD pattern was really very fast. And market, when we started the discussion here, already was above the minor 618 target. We said that market should continue move higher. And in our analysis on this time, this was a weekend by the way, we said that if market will not be able to hold above some inner on the intraday chart, that was the confidence support, we said that market could show some minor bounce, but it should not show too deep retracement. If deep retracement will happen, it will mean that this will be irrational behavior. It's not typical for the normal behavior with the market when it forms reversal pattern, and it will put under question overall this head and shoulders pattern. As you can see what has happened, market has dropped. We also have prepared some analysis here and said that probably we should be ready for a downward continuation because this is not normal. So if even we're taken in consideration this trend line, so for example, by the way, take a look that the target of this ABCD action was right here, and that should become the neckline of this pattern. So take a look, it's 100% extension, precisely at this former top. So if market, for example, will reach this area, it could give us the creation of the head and shoulders pattern. Maybe another pattern, maybe another shoulder could be formed here. It doesn't matter. The most important that market should reach this area. But this hasn't happened because the market dropped. If even we will use as the neckline this low trend line, current behavior is also not natural. Take a look, market already has hit the neckline. So we have bounced down. For example, if we suggest that this is the shoulder, very well. Another touch of the neckline, again bounce down and below these lows already. And take a look, last time market even wasn't able to reach this trend line. So this definitely shows the weakness of the market. And it is not normal action for any hand shoulder patient, because on the right shoulder the bulls should take the control, but we do not see it. And the first signs of this real failure of this patient has appeared right here, when we have taken a look at it the first time, and we said that any fast drop here will put the shadow on the perspective of this head and shoulders patient. And this really has happened. So you can see market shows inability to continue move higher or even break through this area. If we'll take into consideration that yes, market here has touched the overbought every time and shows deep bounce down, but if market really bullish, it could show minor retracement as a respect of this overbought, but later it should turn right back up and continue move higher. Here market even not at overbought, as you can see, it just has dropped lower. So that's why as the conclusion we could say that probably this potential head and shoulders pattern is doomed, and we should be ready for the downward action and taking out of these lows in the medium term perspective. That's our conclusion based on the price action that we see here. In the very short term perspective, guys, we'll see that market wasn't able to hold above the monthly pivot point. Now it's dropping lower. And 2 days ago, this market has formed this red circle. If you will plant here the MACD predictor, you will see that this is the bearish grabber. The bearish grabber suggests taking out of these lows. And if this will happen, this will lead to the even not theoretical but real failure of the shoulder. So market not even wasn't able to reach the neckline or even break this neckline, but market first hasn't reached the neckline for the current time and drop again below and creates new lows of the potential right shoulder. So this is not normal behavior for the pattern. That's why we think that this pattern will not work, it will not be confirmed, and market probably will continue to move lower. That's our view on the current situation on the Great British Pound. On the intraday charts, guys, on the 4-hour time frame chart, I monitor this formation for some time. So personally, guys, I do not like the diamonds and I never trade these patterns because they are quite rare and very tricky. But here I'm mostly interested in the breakout of this pattern, and what I see in this area is absolutely satisfied me. So take a look what we've got. Yes, this widening consolidation that turns to some kind of the diamond behavior, breakout. So take a look, touching of the support, trying to continue move higher, failure, breakout down, retesting of this trend line, and bearish continuation. This looks very typical and normal for bearish breakout and bearish continuation. That brings more confidence that market really could continue move lower. And the first destination point, as I said, these lows, this market should drop somewhere to maybe weekly pivot support one to an area around 139.50, 140 area. So that will be the next destination. On the short and intraday charts, on the hourly chart, we see this downward development. This some kind of the ABCD pattern is forming. Right now, market has hit the 100% extension. If any retracement will happen, it's very probable destination point of this retracement is 131.80, 132 areas, confidence resistance, and that will be also previous lows. So market could retest them. It's approximately even maybe will be some kind of the harmonic swing. So let's measure this minor bounce. So we'll count it. So approximately, yes, the same area this could be reached on this retracement. The next destination points will be 140.15 areas, so 140, no, 140.20. It's 1618 extension of this minor. But this minor extension is just, it's not the major extension, fib extension that we should follow. This is just an extension on the hourly chart. It's a major destination point in the short-term perspective, the taking out of these lows. But potentially, I think that in the nearest weeks we even could see the moving right back down to these lows and taking of these lows, because when the market fails to show upward action from the bottom of the right shoulder, it in most cases, almost every time, leads to taking out of the bottom of the head. So that's usually how failure of the head and shoulder suspension happens. And that's why failure here, market will drop low and this grabber will work. Has really big chances that this will lead market right to these bottoms and failure of this pattern. That in turn could lead to the continuation of the long-term bearish trend on the weekly and monthly chart on the Great British Pound.